Good afternoon and welcome to our quarterly pet insurance pricing webinar, where we'll be looking at price movements in pet insurance over the past quarter and going back a bit further than that to see how the trend has been. If you have any questions, we will have a Q&A session at the end, so please feel free to log those in the chat as we go through, and then we'll come back and try to answer as many of those as we can. Firstly, a bit about us. So Pearson Ham, we are pricing consultants, and our mission is to help our clients succeed through better pricing. And we do this in several ways, from price optimization, capability development, and predictive modeling, and also in insurance, market price tracking and insights is one of those things that we do. In terms of market price tracking, accuracy is really important for us. So we want to be able to make sure that our clients are benefiting from an up-to-date view as to what's happening in the market, how competitors are moving, which segments are being affected, and how that impacts on their own competitive position and inform their pricing decision making processes. We always have permission to scrape the websites that we use, so there are no legal complications in terms of breach of terms of use. And we always use real people. So in case there's any third-party data enrichment that's taking place, our profiles are genuine individuals who can be checked against any credit rating databases. Just a little bit on the methodology. So as I say, we use real people. So these are genuine consumers with real dates of birth and postcodes, and we assign them with animals. So we've designed a batch of pets, which is representative of the UK market, and we assign those to the relevant owners. So we are able to track the market overall and also drill down into some of those larger segments where there are greater representations of animals. We're running profiles every day through the comparison websites, collecting that information and presenting back pricing data to our clients in the form of the Tableau online portal and also PDF reports and additional insights that we provide at regular sessions. Okay, so I shall pass over to Frances now, who will give us a little bit more insight into what's been happening in the market recently and what might be coming up next.
Nice, thank you, Stephen. Cool. So if we look at Q1 of 2024, we can see we've got a bit of a swing between the start of the year and the end of the quarter. So from January, February, we see small amounts of increase month on month. This is lifetime cover starting from £1,000 vet fee levels. So from January, we see increases of 1.5%. That slows into February. And actually, as we get into March, we can see that figure swaps around. So we're actually decreasing in the top 5 price average by 2.5%. So if we're putting that on a 3-month index, we actually see prices falling by 1% in the first quarter of 2024. So that decrease in March cancels out anything that we got in the months before that. On a longer term basis, so over 6 months, that negative 2.5 isn't enough to cancel out the steady increases that we've had building up before then. So we're actually still up by 4% on a 6-month basis. So that's from October 2023. So we're still sort of up on where we were sort of 2 quarters ago. And then on a 12-month basis, much larger figures. So that 2.5% has only made a small dent in the highs that we reached in February of 2024. So still up by nearly 20% for the lowest level of cover on lifetime over the last 12 months. Now, if we break that down into different segments, we can see a little bit of variety between different segmentations in the market. So looking at how that figure looks if you split between cats and dogs. So the shape in March is roughly similar. We see both cats and dogs saw average premiums dropping slightly in March, but for dogs that was a slightly steeper drop down. They have been climbing at nearly double the rate of cats over the last 12 months. But if we actually sort of roll back to January and February, we can see dogs maybe started moving a little bit earlier as well. So there's actually a negative in February for dogs, while cats peak in February. And it's interesting if you break this out between different animal breeds. So what we're showing here in the sort of the blue lines at the bottom is a sort of comparison of prices between a standard moggy cat, mixed breed cat, and a pedigree cat. So sort of one of the more popular brands would be breeds would be a Bengal cat. You can see over 12 months that the prices for both pedigree and mixed breed cats have been moving very closely. If we look at the two lines above, again, we've got mongrel dogs, mixed breed dogs, and quite just a standard typical large dog like a Labrador. Again, pricing has been quite close between the two of them. They sort of roughly end up at the same point, about 16 percentage points up over 12 months. But then layering on top of that, one of the most popular breeds, we see French bulldogs tracking over the same period, nearly double the rate of premium growth over a 12-month period. So if you sort of consider that in the previous chart where we see the difference between cats and dogs, a lot of that's pushing dogs up to a higher level will be sort of excess premium that's been applied to certain breeds of dogs. So maybe the more popular kinds of dogs and ones that are prone to health problems. And then looking at different kinds or different cover types of pet insurance, we can see that decrease in March only applies to lifetime for the lowest end of cover. Max benefit and time limited did still increase at a similar steady rate all the way throughout the quarter. So it's mostly lifetime where we're seeing a bit of a change in premiums. And then again, different cover levels. So this blue line again is 1K cover where we see that decrease, but actually in March, the rate of growth is steady. So lifetime, but cover starting from higher levels, still increasing in March. So sort of that high point of 2K cover up 9% over 6 months. And again, continuing with splits by animal age. So this is back to 1K cover again. We can see that for the sort of the lowest ages, so under a year old, I've seen a lot less premium growth over the year. So only up by 8% for kittens and puppies, whereas sort of animals over a year plus, sort of going up to over 6s, we've seen at least 20% increase year on year. So that would sort of be maybe the cohort that was being born around the time of the pandemic, maybe when you've got a sort of a large boom in pet ownership. Those will be sort of falling into the 3 to 4 years old and onwards from that. Nice. And then again, this is something, if you managed to catch last quarter's webinar, something we touched on is the step change that we see in top pricing for crossbreeds in October to November. So this was something we described at the time. This was a result of a question set change on Compare the Market, which sort of before November, customers were only asked, is your animal a crossbreed, yes or no? Crossbreeds weren't required to input a breed. And then you can see that distinct step up from the requirements on Compare the Markets after November with the journey change, that crossbreed owners now have to input the type of crossbreed that they own, so sort of which breeds they have mixed, and you can see a visible step up in premiums just as a result of changing the way that the question is posed on one of the price comparison sites. So that's why we see that step up in crossbreeds. But then we can also see below that pedigree and mixed breed journey unchanged on both sites, following the shape of the market. Mixed breeds slightly lower than we've seen for pedigrees. Nice. So if we move on to the brands that are most competitive for lifetime cover in March of this year, so starting at the lowest level of cover. So really no change on what we saw at the end of last quarter in terms of the order that brands are appearing. We're still seeing sort of starting from £1,000 worth of vet cover. We're still seeing that the top insurer is accounting for sort of a good chunk of positions at the top of screen. That has decreased, though. Again, if you caught the last webinar, that figure was 55%. So they are now no longer sort of controlling a majority just by one insurer. That share has dropped now to 43%. And then below that, a lot of that has been shared down to the two insurers below that. So sort of insurers 2 and 3 have picked up market share as insurer 1 has lost out. However, if we look at the total share controlled by those top 3 brands, that has actually grown in the last quarter. Now 85% of top positions will have the logos of one of these 3 insurers positioned there. So that's now a good share of the market that's controlled by just 3 brands for the lowest level of cover. And then in that same period, as well as we've seen on the previous slides, decreases that occurred in March. You can see there's a number of brands. If we look at price change versus previous month, a few brands that are most competitive have taken a lot of rate out at one case cover. So insurers 8 and 9 dropping by double-digit percentage points, and also insurers 2 and 3 as well lowered their premiums in March. Nice, but then it's quite a different story when we filter out the bottom of the cover level and move up to 2K or more. So ignoring premiums returned with the lowest level of cover, we're just looking at the best prices returned when there's at least 2K's worth of cover. We see insurer 11. So this brand would have been only the 11th most competitive for 1K's cover. For 2K, they are almost neck and neck with insurer 1. So insurer 1 still has quite a significant share, but it's about half of their position of times rank 1 that they'd had for 1K. So it's sort of very close between the two, and then insurer 2 is still quite a key player for 2K cover as well. And then you've got quite a few brands appearing here as well that did not register or had minimal top spots or none for cover starting from 1K. And again, similar story for 3K. So even sort of step up on the cover levels, we actually see insurer 11 now is more competitive than insurer 1. So they are now nearly 19% of the time you're seeing insurer 11 at these sort of middle levels of cover. And again, 6 out of this top 15 don't even register in the top 25 for 1K. So there's definitely quite a different competitive set once you're starting to look at higher levels of lifetime cover. But the spread here is quite close compared to what we saw for 1K, where 85% was controlled by 3 brands. You can see it's quite evenly spread now. There's no one sort of major controlling group. Brilliant. And then from 4K as well, again, it's the same split. We see even more from insurer 11. So they really have their core competitive set in this kind of middle ground of cover level here. So 22% of the time it is coming from insurer 11. And then for the highest level of cover, it goes back to insurer one. So they've sort of bookended the range really for 1K and 5K. So they again, they've got quite a large share for this, sort of the top end of cover, so 5K or more. It's also interesting as well when you look at the price changes that we see here, and for some of the sort of 3 and 4K cover levels, that we see much less price change compared to what we were seeing for the lowest. So nowhere near the sort of double-digit percentage month-on-month changes that we saw for the bottom end. Brilliant. So looking ahead into what we might be seeing coming up later in the year. So hot in the market at the moment related to pet insurance is the investigation from the CMA looking into the veterinary sector. Now I think in the context of this, maybe it's no coincidence that we do see premiums fall back in March. I think a lot of those price changes actually align with an announcement made by the CMA on the 12th of March that outlined some areas of concern they had with competition in the veterinary sector. So I think there's probably a strong probability that those two are related, that the pricing adjusted because of that. So I expect that's going to be ongoing throughout the year. So there was the announcement in mid-March. Following on from that, there was a 4-week consultation where they were sort of seeking views from the sector into sort of whether to launch a market investigation. So that closed on the 11th of April, and we haven't had any sort of further updates on that since, but I expect we'll probably hear more from that soon. The CMA is currently reviewing the responses they had on that consultation. Nice. And then looking forward as well. So this is almost full month price changes that we have for April, split out by different cover levels. So you've been seeing this chart up to this point so far. If we tack on pretty much the full month of April for Market 5 at different cover levels, we can maybe see how this story is going to continue, and maybe what some of the context is going to be in the Q2 webinar. So already we're starting to see, while sort of 2 to 3, 4 and 5K continued to increase from February into March, we are also seeing lower levels of growth, and in fact, some cases, small decreases happening elsewhere in the market. So sort of early on, it was just targeted at the lower end. We're now seeing that spread out into different cover levels. So that does sort of display a varied approach, a more targeted approach to pricing as well. So we see brands changing their pricing based on different cover levels rather than across all their products. We actually see 1K coming up slightly as well. I think also what this might start to imply is that we're seeing brands possibly being a little bit slow to react. If this decrease happened, we saw, I think it was a handful of brands you saw in that 1K leaderboard that it was big decreases from some brands, but not all, taking rate out during March. And it looks as though into April, you see other brands reacting to that. So it takes maybe a few weeks for them to pick up on the change in market conditions, see that prices are starting to drop, and then react to that too. So it's a little bit of a delayed reaction potentially from changing the wind that sort of happened in March. It takes until at least April for that to feed through. So potentially some need for quicker reactions in pricing, picking up on a lot of what changed at the time it changed in mid-March, whereas it looks like from the data that we have in our portal, in our client portal, we can see that it actually takes maybe 3 or 4 weeks for some of the other brands to react to that in April and then adjust their prices too. Nice. I think that brings us to Q&A. Stephen, would you like to take some questions? Are there any in the chat?
So we have got some questions. So are there fewer players with a 1K product than others? Wondering if that's why there's a difference in trend and why the percentage top is less spread.
I think so. Can you move yours? Sorry. Cheers. I think so that 1K will be not only products that are 1K only, it will just be starting from 1,000. So there could be 2 and 3K products that are appearing, in the top 5 starting from 1,000. So we're not sort of segmenting here and go, this band of products, this band of products. It is just a minimum level, but it's perfectly possible for cover starting from 1,000 to have 2 and 3K products contributing to that. So I don't think it's necessarily a sample size. I think because it's a cheaper product, there possibly will be some exaggeration of percentage changes. I think taking X pound amount off of a lower premium will obviously equate to a bigger percentage change. Whereas if you're talking, sort of 4 figures for an insurance premium, then a pound amount's going to be minimal. So it's a bit like if you consider the home insurance, when you see larger percentage changes tend to happen on contents only versus buildings and contents, just because it's a cheaper product. I think that's why maybe one of the contributing factors to why we see a bit more variation for 1K.
Could some of the changes that we've seen, the reductions coming in, be driven by new entrants who are charging lower prices, or is it price changes by the existing brands?
I think that's a good question, because certainly if a new insurer or several new insurers were to storm into the market, that would push the top 5 average down. So it's products, just all the prices that are there. I don't believe we have seen too much in the way of new products appearing. That's something I might need to take away and look into as to whether obviously there may have been a few new logos appearing over the last quarter, and whether any of them is also contributing.
I think that's all the questions that we had.
One more.
Oh no, I'm looking at Q&A. There's another area. Okay, fine. There's 2 areas in the chat to leave questions. So there's chat and then there's Q&A only. So I was just looking at the Q&A only. So is the expectation that pricing will increase again now that the CMA review is complete?
Well, I think my understanding was that they haven't even started. If I go back to sort of the official wording on the CMA, is that they are seeking views on whether to launch a market investigation. I got the impression that this might be something that would go on longer, and then with it, every time you get this sort of press release and then follow up media attention. So I don't think that we've seen the end of it. Certainly we need to see what the response is from this consultation in April. So that's still to come. And then I'm not sure how much longer it will go on after that.
Yeah, and I guess it depends on what the outcome of the investigation is and what the recommendations might be to the insurer, to the vets. So it's focused on the large veterinary chains. And the hypothesis is that because those large chains are expanding, they're buying up independents and kind of increasing the numbers, they're creating more of the pricing monopoly. They've got a greater flexibility to be able to increase prices, reducing competition in the market, which obviously is why the CMA has got involved. So if they're going to come out with a raft of measures which mean that veterinary prices will drop, we would expect insurance prices to reflect that. Another question, do customers tend to actually buy 1K products? It is a very low limit.
I honestly wouldn't know. I'm not quite sure what constitutes a low limit.
Yes, so I don't know. I think the people on this call will be able to answer that better than we can. So we are tracking market prices and market price movement, but obviously our methodology doesn't include purchase. So we've got the panel of consumers and we're running quotes for those individuals each day. So nobody's actually buying anything. So all we're doing is collecting the information and presenting that back. So I'm not sure how much of the market is made up of the 1K policies. It is a low level, but people may be buying that. I mean, there are affordability questions, and we are going through the cost of living crisis. So I suspect there are several customers who are going to buy £1,000 limit. I don't know what percentage of the market that might make up, but I guess there are a few people on the call who would have a better idea about that than us. Okay, I think that covers all of the questions that we had. So I will thank you for attending our quarterly webinar session this quarter. And if you do have any questions that you think of after this, then please do feel free to reach out and contact me directly or Frances. So I'm on Stephen Kennedy at pearsonhamgroup.com, or you could contact Frances Luery at pearsonhamgroup.com as well. And we'll be happy to answer any questions. Or if you just want to follow up with any questions about our services, I'd be happy to provide some more information on that. And perhaps you can get a bit more of an insight into who the insurers are that are making those moves and be able to tap into daily tracking to make sure you know when changes are happening. Okay, so I shall look forward to next time and we'll investigate what's happened in Q2. Thanks very much. Goodbye.